volume is fairly low on this Monday morning because the market is pretty much waiting for Wednesday, waiting to see if Ben Bernanke is going to say anything about quantitative easing. I'm here with Stephen Guilfoyle from Meridian Equity Partners. So, Steve, I can't imagine that he's going to come out on Wednesday and say anything new. He keeps playing that middle ground and staying on top of that fence. I could do this, I could do that. We stand ready to do, anything. But the market still seems like it's treading water for this event.
Yeah, well, we've noticed a trend where up to a Fed meeting, the market does seem to rise in the days and even a couple of weeks up to that meeting. And then if nothing's done, then we have our little sell-off. Even if something's done, we might a day or two later have a little sell-off. This one's a little different because there is some anticipation something might happen. Then again, they might wait till September. And you have the ECB the next day, which there is real anticipation that Mario Draghi will act after the comments he made last week. So there's really a lot on the table. Starting really tomorrow, there's a lot of economic data this week. So there's a lot for traders and economists to chew on this week, but not today. Today's a light day. You're seeing that with the volume. It's very light. And you're seeing that with the tight trading range thus far.
It does seem like Bernanke is running out of options. It doesn't seem like there's much ammunition left. What could he do?
All right, now he could do a plain vanilla quantitative easing, which seems to me to be unlikely at this point. There seems to be, like everyone's saying, a diminishing return there where maybe the risk is starting to outweigh the possible reward. I do think that he could go along the lines of a Bank of England move where their lending scheme where there is some kind of punitive action, maybe a very low or a negative interest rate for stashing cash overnight and a reward, let's say some kind of reduced credit for the extension of credit yourself. If the bank extends credit, then they get cheaper credit from the Fed. So there could be a risk-reward kind of Pavlovian dog experiment here going forward.
All right, well, that's fraught with all kinds of problems, too. As we know, when the banks extended lots of credit, they got into this situation we're in now, and now the Federal Reserve could be pushing them back into that territory. We're going to keep our eyes on that, but as it stands now, it looks like the market is kind of treading water waiting for this news on Wednesday.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to